Hey guys, my name is Crypto Phantom and today is day 2 of 365 days of becoming profitable trader. Let's go. So as you know, I already told my story at the beginning of day 1 video, so you can watch that out if you wanna know about myself. So let's start. Objective of today: strengthen understanding of market structure and improve focus on discipline, continue building consistency and start recognizing pattern in the market. First, we're gonna do again trading education, trading in the zone book by Mark Douglas. We're gonna read it. Today we are going to try to read all chapter. Uh, we're gonna focus on key level education, highlight key psychological concept, write 3 to 5 important notes. So, guys, prepare your notebook, okay? Let's start. Trading in the zone will help us deepen understanding of emotion, fear, consistency in trading. Was the we throughout our video we're gonna read bunch of books, not only these, because a person who has the self-discipline and control over his emotion and can understand human nature, he's gonna be profitable trader. So reading book is important. Second, we're gonna learn SMC course 60. We're gonna learn SMC course fractional nature. It's gonna be 15 minutes instead of 60 minutes. So maybe 25 minutes, because throughout the video I'm gonna explain on things, so it may take 25 minutes, 30 minutes. A focus topics: deeper market structure understanding, trend versus range, continuation versus reversal, internal versus external structure. These we're gonna learn it in the future. A The goal is basically seeing structure clearly on charts. Third one is mindset session. Like, this doesn't mean anything, but maybe at the last part of the video we're gonna talk 15 to 20 minutes about how today live went and what trading is basically about, like deep talk to yourself. And fourth is we're gonna observe a chart little bit, like what kind of thing the chart did, so you guys can understand like what's the chart is trying to do. Okay, we will start by reading Trading in the Zone by Mark Douglas. So guys, here we are, Trading in the Zone chapter 1. Yesterday we read about different kind of chapter. Today it's gonna be different. Let's go. I have everything prepared. Okay. Uh, so, but by the way, I'm not gonna read. Okay. Basically, I'm gonna read in my mind, but as you I'm as you know, when I'm scrolling, you guys can also study. Like, I'm gonna mark like these which part I am. Okay. So let's go. Chapter 1: The Road to Success. Fundamental Technical or Mental Analysis. In the beginning, fundamental analysis. Let's start. So at this paragraph, it's basically talking about like technical analysis. Like people in the Wall Street, they thought that whoever use technical analysis, eh, they are like crazy. They are like crazy because like most of the time in the trading nowadays also when somebody use train line method or different method, people laugh at them, but like everybody, every single person in the world, they have their own unique edge against the market, so don't ever make fun of no one, whatever or whichever kind of strategy they are they are working with, because there's their own unique edge. Because if their strategy is helping them make money, let it be. Like, why are you making fun of that person? He's basically more successful than you. So instead, try to learn what's your mistake. Let's go. So here also it says what's the fundamental analysis is, and for example, a lot of people they use trend line, RSI, MACD, or moving average, different kind of trading instrument, or so, and they use like supply, demand, resistant, or liquidity imbalance. They use bunch of stuff in this market, like all of this thing. For me, like I believe none of the strategy works in the market, because market is run by algorithms. ICT says it's run by algorithm. Some says it's run by elite people. Some says it is run by the juice people. But I believe that it's run by human nature, human emotion. Because if you see the market, if you see the candle, if you see the every move, it's basically reflection of thousand and thousand of people. And the machine learning, what it does is it basically learn this human pattern, like human emotion, depending on the situation. And they also did like institution or the bank, they don't use strategy, they use like basically machine to take trade. The machine, out of the outcome of different emotion with different calculation, it does thousand of calculation, it takes trade, because they know human nature and human heart more than us. So if you want to be successful trader, if you know the human nature, it's gonna help you so much. So you're just basically saying that mathematical models, um, like interest rate, balance sheet, weather patterns, and numerous other, like this is how they analyze everything. For example, this it says machine learning. Like for example, machine also makes mistake. Like for example, like 2009 crash where a guy from London he put multiple fake orders. That was basically called scooping. Like you put hundreds and hundreds of thousands of fake orders, and the machine thinks that it's gonna go short and it will sell. The last At the last minute he canceled all the order and bought again, bought at less and sold at high. This is like fantastic story about trading. I love trading because it's so crazy, like it's different world, like where people of craziness exist. Let's study again. Here is the problem. Most of the people in the world they lose money because it's not that they don't have good strategy or good fundamental. Why they lose money is because human nature and control over yourself. The biggest problem is basically your emotion, because if you can't control your emotion, whenever like it gets inside of trading, it always fucks up everything. Like for example, myself, most of my bad decision is because of the emotion, because I had no emotional control over trade. And I see a lot of successful people in trading like when they are trading live, like I can see that they don't even flinch when they are like losing basically 6, 7, 8, 9, 10 or $20,000 at minute or 10 minute or 5 minute. There's the kind of level of emotion control that you need if you want to be a professional or profitable trader. And throughout these 365 days, we gonna understand everything, every single thing, every human emotion. And I'm so excited for the future. So let's go. This one is finished. Let's do it here. The shift to technical analysis. Here it basically says that how the technical analysis works, and people back in people used to believe that technical analysis was a joke, but later people figure out that you can make money because if whichever strategy. Okay guys, let's start. Okay, this since we all know this shift of technical analysis, it's basically saying that people basically back in the days they used to think in more like probabilities rather than technical analysis, and technical analysis gives you infinite number of possibilities where you can think when you where you can like basically like there is some percentage chance for it to win. That's why nowadays we see a lot of people using technical analysis over any kind of fundamental thing because it gives you a lot of like a it gives you unlimited number of possibilities to take advantage of the technical approach of open up many more possibilities because it identifies how the same repeatable behavior patterns occur in every time frame, momentum, daily, weekly, yearly, and every time span in between. In other words, technical analysis turns the market into an endless stream of opportunities to enrich oneself. So basically, technical analysis turns the market into an endless stream of opportunities to enrich oneself. So that's why nowadays on a bank and this all this hedge fund they also use technical analysis, but they use much machine learning machine. Okay, now the shift to mental analysis. Let's read it. So here it's basically saying that why more and more trading community shift their focus from technical analysis of the market to mental analysis of themselves. After the people, after from 1970 to 1980, more people were using technical analysis, so it was more predictable, so people started using more like psychology and mental analysis or human nature. Like this also make you more powerful. That's why throughout this series we're gonna learn a bunch of stuff, like much more stuff. So let's get it in, okay? There is infinite and unlimited way to make money, and there is a limitless opportunity in the market, but you have to understand. Like, control over yourself is much more powerful than any risky trading, because if you do any risky trading you may lose all your capital, blow your account. But if every trade is 20-minute, 30-minute, if you give one trade 30-minute analysis and you take trade, it has more success chance than taking a trade without thinking in probably 2 to 3 minutes. Okay. Again, this part is basically saying that mental control is more important, because it's important because we whenever we look at the market, you said, oh my fucking god, I could have take that I could have took that trade and it would have made me so much money. Bro, don't think that. You have to think for long term period. Like, basically you have to think in long term period, like, uh, it's not making money instant, it's making compound and compound, slowly grow, instead of trying to grow this much fast. Grow slowly and safely, and there will be something that will happen that will let you grow this much but fast. Okay. Here, there is a big difference between predicting that something will happen in the market and thinking all the money you could have made. The reality of actually getting into and out of trade, I call this difference, others call it a psychological gap that can make trading one of the most difficult endeavors you could choose to undertake, and certainly one of the most mysterious to master. So trading is so mysterious, like, for example, like, it's not same as different job. It's so, like, people, like, trading, like, what is trading? Like, you really have to think yourself, what is trading before you enter in this game of making money, because people think, like like people will always think what kind of money they could have made in that trade, what could I have done at that time. But instead of thinking like that, you should think, how could I make good quality trades, how could I take good quality trades, so I could have good good trade in the future also. This is wait, wait. This message is basically saying that like people who take trade, they can claim to be a trader, but there is a difference between a trader and a consistent winner. Basically, like consistent traders are those who always win, because they have proper psychology, mindset, discipline, and they have deep knowledge of market. Like they can feel like what the market is trying to do with just watching the candlestick pattern. Some other people use like depth of market or or volume chart or liquidity heat map. They use bunch of things because these are like more advanced retail trader a strategy, so there are much more ways to optimize your trading way. So throughout this journey we are gonna learn everything. We're gonna be the best in the world. This is such a deep message. Like for example, consider like handful of people in from our planet Earth. They have made in they have made it into the moon. And but you can see the moon, but you can see the moon, but every night the moon is visible. It seems so close, but we could just reach out and touch it, So why don't you think in a different way? Like when you are trading, instead of letting your emotion take over your head or thinking whatever bad outcomes, we can think in a different way, like so deep, like it's so psychological way, it's so deep. This is such a great message. Like people, like some people think like why the fuck market is not, like why the fuck I'm not winning trade, or why the fuck I'm always losing the trade. But it's not true. Market always gives money to everybody who has the mind to put trade and to take risk. Those who don't have the capacity to put risk, they're the one who will lose. Risk is also important in trading. Without risk, there is no gain. Without gain, there is no success. For example, this part is basically saying like that for some people, for those who have learned to how to be consistent, they already broken through what we call the threshold of consistency. Like they easily make so much money. Like basically people will think, how the fuck these guys are making this ton of money? Like they see 20 or 10 tens of thousands of money moving like it's nothing for them. Like they have this mental control over their mind that it always shocks me. Like I'm 15 years old, okay, and I know that I can reach their labels if I stay consistent and disciplined throughout the journey. Let's go, let's read. Just as we talked multiple times, game of the game, it's all about the game of the mind, bro. Like if you have good control over your mental strength and your mindset, everything is possible and every take, every trade is gonna be easy for you. Wow, this is just such a great message. For example, it says, just like it says, their attitude traders who make it beyond the threshold of consistency usually experience a great deal of pain, both emotional and financial, before they acquire the land of attitude that allows to function effectively in the market environment. I Like for example, I have lost so much money. Like I've been in so much pain, emotional, financial situation, my family problem. Like I have seen everything. I have been nights and nights crying. Like, should I really be trading? Should I really be learning? Or should I just focus on my academy? I always think, am I doing right thing? There were times where I was so emotionally stressed out that I had headache, bro. I had fucking headache. I just slept that days. Like I also think that a good trader, always comes from both emotional and financial thing he suffered. So like only through suffering and through losses will make you genuinely the best trader in the market because lo- I just learned that losing is not bad. Losing actually helps you to make yourself better and more predictable in the market outcome. So losing is not worse. Like a losing is the best opportunity that the market gives you because it makes you want to learn more, and if you are able to overcome that emotional and financial problem, then you will grow so much that everybody is gonna become jealous of you. For example, this is so true. Like we know that every trade we took, it can either be loss or win. The chances of win is less than the chances of loss. But even if knowing that, if you take trade with your confidence and everything, and what do you think of yourself, risk taker or perfect, mentally perfect trader? Okay, guys, let's see. So, Like, this is so true. Like, just as I said, if you are not risk taker, then trading is not for you, bro. Trading is all about risk and probabilities. But you have to think for what percentage you are risking. Yeah, before, like, this is so true. And like, you don't have to think risk in a bad way, like, you have to think a like to you have to hug the risk, like, you have to embrace the risk. You have to think risk is risk is the way for me to be a profitable trader, or risk is for me to be a to have a profitable trade. So risk is important, and don't have to you don't have to be scared in front of risk. You have to embrace the risk. Like I said before, the base trader and noob trader, the difference between them is basically moon and earth. Like, the noob trader got all these scared, like, they are so scared that they make bunch of, like, if you see a professional trader trade, they always have this serious, like, eh, they always have this serious in themselves, like, they put trade without even considering the risk, like, they take freely trade. Okay, I'm done. Okay, I will take this risk. Okay, I will take this risk. But normal trader, what we do is we sweat, we tremble, like we are like we are betting our whole account. And we we take like 2 to 3 minutes mentally to take each trade, because the loss are used. But the big professional trader, they don't even think the trade. Okay, this trade is perfectly aligned with my strategy and my risk to management and my psychology. I will take this trade. Boom. They don't care about the risk. That's what makes it different between risk trader, normal trader, risk trader, professional trader. I'm gonna read this part again because it's so interesting. What I call the four primary trading fears. Now you may be saying to yourself, I don't know about this. I always thought traders should have a healthy fear of the market. Again, this is perfectly logical and reasonable assumption. But when it comes to trading, your fear will act against you in such a way that you will cause the very thing you are afraid of to actually happen. If you are afraid of being wrong, your fear will act upon your perception of market information in a way that will cause you to do something that ends up you making you wrong. When you are fearful, no other possibilities exist. You can't perceive other possibilities or act on them properly, even if you did manage to perceive them, because fear is immobilizing. Physically, it causes us to freeze or run. Mentally, it causes us to narrow our focus of attention to the object of our fear. This is such an interesting thing. Let's 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 read more. We are here. So basically, confidence is the key in trading. Like even if you are good analytic or you have great perception of the market, and even if you even if you learn enough, about how the market moves, it will never matter because like single even a single trader can make difference in the market, and market can make you wrong or cause you to lose money. So your we should understand that even if you learn lot of bunch of things about trading or whatever, it may never work if you are not confident enough to take a trade. Okay, it teaches us to lack of confidence, lack of discipline in improper focus can make you bad trader and can make you lose a lot of money. I will watch this again because this is so deep. Guys, okay, so today we learned chapter 1, we finished chapter 1, and tomorrow we gonna read chapter 2. So that's it for trading in the zone for today. Okay guys, we're gonna watch this video, so let's see. This is SMC second course, learning fractional nature, okay, fractional nature. Is basically saying that in triangle there is smaller triangle, and in that smaller triangle there is smaller triangle, and inside of triangle there is triangle and triangle and triangle and triangle. So this is basically fractional nature. You got big triangle, inside of there you got a bunch of big triangle, and inside of that triangle inside you got another small triangle. You got so many bunch of small triangle inside of one big triangle. Inside of those triangle you got other more smaller triangle. And you guys probably are thinking what the fuck I'm saying or whatever. But fractional nature is important because if without this you can't understand the nature of the market. If you can learn this, you can understand the market. You will able to learn how to entry, where you should put your stop loss. You will understand what is the trend, and you will understand in a deeply way the market nature and everything, and the market next move and everything. So he's basically saying that triangles basically means time frame. You got inside of daily, in daily candle you got 24 candle inside, which represent 1 hour each, and inside of 1 hour candle you got a 60 minute 60 candles, which represent 1 minute one candle, and you got much more different kind of time frame like 15 minute, 20 minute, 30 minute, 45 minute. It's basically the structure of market. And for example, if you want to see the market trend, you obviously it's like I already watched this video 4 times, I already know a bunch of things. For example, if people want to know the way what the trend is going, usually they go to higher time frame. They probably go to daily time frame. They're gonna see what it did that day, like it was bullish or bearish, and you go inside of that specific day hour, and you can see like what the market is going, hunting external or internal liquidity. Like there is a bunch of stuff that we're gonna learn throughout our journey history, so keep up with the stuff, okay? Because this is for 365 days, each day with consistent. And I know for the fact that I'm gonna make it. So you guys will also make it with me. We all gonna make it if you are consistent. Even if you like, I am for myself, I am investing 12 hours a day, like 2 hours daily content. Before content, I have to organize everything, like what I'm going to show today, and I have to prepare like everything. And after the content is finished, like the editing is the hard part, like you have to spend like 3 4 hours editing. And I got bad PC, like my PC is not that fast, and it took me 1 hour just to post one video, because the video was too long, like 1 hour and something. The PC could not handle it. So yesterday invested like 11 hours. Today is probably gonna be same. So let's go. Let's watch it. Yeah, he basically explaining right now the what I explained, that inside of daily time frame you got hourly, inside of hourly you got minute time frame, and much more time frame. He's saying that in one day inside you got 1 hour, 2 hour, 3 hour, or 4 hour, or different kind of time frame. Means he's basically showing you guys the time frame, what kind of time frame exists. How can you identify market trend? You're probably gonna say, okay, this is uptrend. Just by the looks, you're gonna say that it is uptrend. If you're looking at the 4 hours time frame. But if you go to like 5 minute time frame, then you will not see that as a uptrend. You will see it as a bearish, because yeah, he's basically saying that, like, when people with their simple looks, when they see at the specific drawings, like specific charts, they see, oh, it's uptrend. But how can you say that it's uptrend without looking which time frame we're talking about? For example, if you see at a time frame of 4 hours, okay, it may be uptrend. But if you look at the smaller time frame, like 2 minute, 1 minute, 5 minute, 10 minute, it may be down, like downtown, like bearish. The chart may be bearish, because depending on time frame, it's different market. So whenever you put trade, you have to look in the bigger time frame what the market is doing. Just because you are in the smaller time frame, you can't put trade based on the market structure that is doing in that smaller time frame. This is the way of the market working, that it always move like up down, consolidation, and later distribution. From there it came up move, down move, down move, up move, up move. That is known as the fractional nature. Up down, up down, up down, zigzag, zigzag. If you look in the smaller time frame, you will probably see like it's going up down, and it's making trend line in 1 minute or 5 minute time frame. Like if you look at the higher time frame, you will see that the candle is going up down up down up down. Buyers and seller are pressuring up down. The sellers win. You see in the 1 hour time frame, how many candles are there inside of 1 hour time candle? 60 candles inside of 1 hour time frame. This is known as the fractional nature. Market always works in impulse, correction, and continuation. Market in bigger time frame is always making a like trend line or a channel. Again, the double pattern, like why you are like again with the double pattern, why people are entering here. Why didn't they enter from here? Because they didn't know like what the market is gonna do. They just wait for it to form double pattern and they just enter it in when it come to retrace at this zone. They enter. Why didn't they enter from here? We're gonna learn it. SMC and ICT player only starts from bottom. Guys, hope you have learned the fractional nature. Basically, what I learned from fractional nature is that, like for example, we got here hourly time frame. Hourly time frame, like 1 hour time frame. Like this here is hourly time frame, and you can see seller and buyers are pushing this one single candle. But what we don't know is that inside of this 1 hour we got started from here all up to here. All this move happened in a 1 hour time frame. So fractional nature is basically something that happened that basically happened at this specific time frame, like 1 hour. Inside of 1 hour, 1 hour candle, this move happened. So it's basically mean inside of one candle, different fractional nature, like different time frame. And For example, if we go to like we got month weekly time frame, this is the move that happened in 1 week in a singular candle. This is more like February 9. Yeah, one weekly candle. Inside of 1 week candle, you got 7 days candle. Inside of 1 day, you got 24 candle. Inside of 1 hour, you got 60 candles. Inside of a 1 minute, you got bunch of other candle also. So basically, this is what the fractional nature means. Hope you love the SMC second lesson fractional nature. And in the future, we're gonna learn bunch of things like a different thing like mitigation, order block, or FBG, or smart money, like bunch of things we're gonna learn. Smart money concept is it's good. It will help you understand the market, the way it's work. So let's go. Okay, guys, that's for today. We'll we today we learned trading in the zone. We did SMC course. Uh, throughout our throughout our video, we did mindset session. I talked a bunch of time in a disciplined way in the trading in the book zone, explaining something and doing deep talk with you guys. And in the chart 4, like we observed the chart and I told you what the fractional nature is inside the chart. That's it for today, guys. Hope you like the day 2 out of 365 days profitable challenge, and see you guys in the day 3. Bye.